Thank you. Good morning, everybody. This morning I just wanted to chat through for the next 10 or 15 minutes, just through some e-gaming insurance solutions. So I'll go through in turn, I'll go through prize indemnity, directors and officers cover, and cyber insurance, and I'll round up then with the sort of touch on the market conditions at the moment. So before I do that, I just want to run through who MAC Group are. So MAC is the leading insurance and financial services business here on Ireland with three main identities. You've got MAC Financial, who provide pensions, group risk and employee benefits. Then MAC Commercial, where I work, is a market-leading insurance brokerage. And finally, MAC Financial Pension Trustees, who provide pension trustee services. So just a little bit more about MAC Commercial. These are some of the products or policies that we provide. So we provide to private business and businesses in all insurance sectors, including but not limited to trust and corporate service providers, e-gaming business and financial services. MAC is the leading insurance and financial services business here in Ireland with, sorry, what's going the wrong way? Sorry. So these are the three main areas that I'm going to talk through, that should be helpful for the e-gaming sector. So I'll start with prize indemnity. So at MAC we work with financially secure insurers and underwriters who are experts in the e-gaming industry. So typical policies to protect businesses in the online gaming sector include prize indemnity, cyber insurance and directors and officers insurance. And as I said, I'll round up with the market conditions thereafter. So let's discuss each of the above. So I'll start with prize indemnity and what it is. So online gaming provides an opportunity to win life-changing amounts of money, and the online promoters need protection in such circumstances. So it's a contingency product. It's designed to help businesses run activities without the fear of huge financial loss. It's an indemnification insurance for a promotion which reimburses the insured when a big win occurs. So instead of holding large cash reserves, the promoter can simply pays a premium. So it's simple risk transfer. So prize indemnity, and who's it for? Well, it's for online and land-based casinos. So it's those involved in online and land-based casinos, event organisers to include esports, which is a fast-growing sector, as we all know, lotteries, golf days, corporate golf days, where there might be a prize for a hole-in-one, or where there's a car as a prize or a large cash prize. So just looking at some of the covers, limits and costs of this type of insurance. So it covers lottery jackpots, mathematical games, sports prediction games, and sports skill prizes. We see limits in the region up to 20 million in the UK, and $30 million in the US, Canada, and Australia, and 25 million euro in Europe. So typical premium can cost about 3 to 5% of the total prize value, and this will depend on the calculated odds of winning. So coverage can be tailored to specific needs, and quotes can be obtained fairly quickly within 24 hours in some cases. So moving on to the next insurance coverage. So cyber insurance. So what is it and who's it for? So cyber insurance is an insurance product designed to help businesses hedge against the potentially devastating effects of cybercrime, such as malware, ransomware, distributed denial of service attacks, DDoS attacks, or any other method used to compromise a network and sensitive data. It is for any business that holds sensitive data, have a website, or on social media, or reliant on computer systems. So basically, the majority of all businesses these days. So just briefly, what does it cover? Cyber insurance generally covers two main areas. So you'll have your first party costs, so first party losses, and then you'll have the third party losses, so third party claims where data has been hacked and taken from the system, personally identifiable information has been stolen. So it's usually broken into two of those main areas, but within those, a typical policy will include cover for cyber incident response. So when a cyber attack occurs, including things like coverage for IT forensics to find out what actually happened, and to close that back door once it has been hacked. Legal costs around that, breach notification costs, crisis management, and public relations. So dealing with the aftermath as well, and the public relations, the PR for that particular firm. Cybercrime is another coverage area, which includes coverage for social engineering, theft of personal funds, cyber extortion, and ransomware attacks. We've then got system damage and business interruption, so including full data recreation, income loss and extra expense, the consequential reputational harm, which is an unusual one but is in there, and hardware repair and replacement, so the basics been put back together. We've also then got network security and privacy liabilities, which is more of the third-party liability coverage, including the management liability, so for the directors and officers, arising from a cyber event, and any regulatory fines and penalties. Media liability, including defamation and intellectual property rights infringement, and also technology errors and omissions and court attendance costs. So they're the sort of typical areas of cover within a cyber policy. So just looking at the limits again provided for a cyber policy. So you get limits of up to 10 million can be arranged with £1,000 deductible or excess, as you might know it. And minimum premiums for a business can start at about £500, that's without the crime, or £1,000 to include crime. So how is it rated? How do insurers actually charge for this insurance? Cyber is usually rated on the type of business, so the risk type, the revenue of that particular business, and particularly any sensitive data held by that business. And of course, any claims experienced, any previous hacks or claims in the past. So just some examples then, some brief examples of some cyber insurance where insurers actually paid out. So we had a law firm leakage. When a law firm employee fails to recognize a malicious attachment, it prompts a full-blown ransomware attack. Recruitment ruse, employee at a recruitment firm falls for a phishing scam and a significant payment is misdirected. And reputational repercussions. So a data breach leads to a damaged reputation and subsequent income loss for an online business. And then our final coverage is, most of you might be aware of, but don't know what it is. And you may have this, I'd say most businesses will have it, but don't know how it responds or how it reacts. But they know they have it, the comfort of having it. So just to explain this briefly, so protects the directors and officers against claims made arising from their decisions and actions taken while managing their business. So firstly, a director or officer will rely on the Articles of Association, which undertakes to indemnify its directors and officers. Then it's vital that that's backed by a corporate D&O insurance policy to protect the company's assets, which is also known as balance sheet protection. And then finally backed by individual D&O cover, which is hugely important in a situation where a director might find themselves out on their own, where the company has either become insolvent or it's illegal within that jurisdiction for the company to protect the director. So it's crucial that every director in business these days has an individual D&O policy. It usually comes combined with all the other corporate D&O coverages as well, or in a management liability policy. So why do we need it? I suppose it's fairly straightforward. As an individual director in any business, your personal assets are at risk. And we see investigations by regulators are more and more common these days. So to protect in situations of as I just mentioned, situations of bankruptcy or insolvency, particularly as we see in the recent pandemic, a lot of insurers now unfortunately are putting in, you have to be careful and look at the policy wording, they're putting in exclusions for insolvencies. So there's just certain areas that you need to keep an eye out within your policy. But it also, on the other hand, helps attract, should I say, talent to your business. So if they know you've got a good policy in place, they should have no concerns. So responsibilities of directors, which I'm sure you're all fully aware as directors of businesses, what they are. These are established through statutes. So you have statutes like the Financial Services Act, the Companies Act, the Health and Safety and Welfare Work Act, so to name but a few. But other duties of directors include a duty of care and skill, so the care an ordinary man would take in the same circumstances on his own behalf. Fiduciary duty, so must act honestly in good faith in the best interest of the company and have no conflict of interest. Just some claims examples of directors and officers where claims, I suppose, can arise. Employment and HR, so unfair dismissal, where a director or officer has been named personally in an employee's claim. So an employee takes an action for some reason or another against an individual D&O. Your D&O protection should cover that. Shareholder action, so a shareholder may increase their investment in a firm on the basis of information received from a director which turns out not to be accurate, and therefore takes an action against the directors or officers. So intercompany claims, firms can sometimes take action against their own directors or officers if they've committed a wrongful act that causes a loss. And finally, regulatory breaches, so directors and officers can be pursued by a range of professional bodies for breaching regulations, and notably here in the Isle of Man is the Isle of Man Financial Services Authority and the Gaming Commission. So just to round up, just to give you an idea of where the current market is, and this is probably financial institutions in general, and as you're all probably aware, if you pay for insurance every year, it's getting more and more expensive and more difficult to obtain coverage. So we've seen reduced capacity and increased rates. Market conditions were tough in 2020 and continue to be so again this year. So although the direction of travel is still premiums going up by about probably 15–20%, we're seeing the first signs of recovery. So we expect new entrants, that's new insurers in this space, and renewal demands are starting to ease a little bit if you've had to go through the torturous process of providing information for your renewal this year. You'll be fully aware of that. So hopefully those questions will ease. So it's an improving picture, but to remain volatile with a large variance in the renewal terms. And something quite topical then, I suppose, whilst claims in respect of COVID have had an effect, but we haven't seen many claims come through as yet. We would expect to see, as businesses, as the economic assistance packages start to unwound, and underlying claims and issues are revealed. So it's only a matter of time, really, I'd say, over the next year, that we'll start to see the repercussions of the pandemic and the knock-on effect to businesses and therefore claims as well. So thank you. It was a bit of a whirlwind in insurance, but I only had 10 or 15 minutes. But thank you very much for your time.